Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 16th. My name's Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media. I'm here to not only talk about the economic data and how that impacts the markets, but I also, in these daily market commentaries, talk about option strategies and how we can trade in and around our portfolio with them. All right, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with the economic data and how that's going to impact the overall markets. We've got some really good economic data for a Monday. Usually it's pretty light, but we've got our flash PMI estimates coming out of the European region. Now remember, Purchasing Managers Index is what I believe to be one of the most important economic data points of the month because it is very forward-looking. These purchasing managers see the demand and go out there and buy the supply based on future demand. So it's very forward-looking, whereas some of our other economic data points like, say, unemployment numbers, those are kind of hindsight. It's already seen that ramp up. They've done the hiring, so it's very hindsight-ish, not very forward-looking so much as this economic data point is. Now remember, anything above 50 is expansion in the economy. Anything below 50 is contraction. We see too many of these in a row that are below 50. That shows that we are recessionary, all right? So let's get on with the French flash PMI estimates coming in at 52.4. That's right in line with where they were expected to be. We got the flash manufacturing PMI out of France coming in at 50.3. So just treading water above that 50 mark. Now we move over to Germany, who has seen negative or at least below 50 since February, and that came in at 43.4, expected to be 44.6, and that's for the manufacturing. On the service sector side, we did get 52, which was higher than expected, a nice revision to the backside number as well. Now for the greater European area, outside of Great Britain and outside of France and Germany, the reason why we split out France and Germany is because they are the leaders in the manufacturing sector of Europe. So we'd like to see what they are doing and how that is affecting the overall economies over there. But everybody else, we got manufacturing PMI coming in at 45.9, expected to be 47.3. So again, that greater European area in recession since basically February of this year, just alongside with Germany. But we did get the PMI service sector coming in at 52.4, which is higher than that 50 line of delineation. So that a good thing. Great Britain manufacturing coming in at 47.4. Again, we were kind of expecting that to possibly go back above 50 heading in here to the holiday season, but we didn't quite get there. The service sector, though, came in at 49. And it was expected to be 49.6, so still slightly lower than expected there. We got the Empire State Manufacturing here in the United States coming in at 3.5, expected to be 5.2, but better than last month's number of 2.9. So a little bit better, but not quite what we were expecting. And then we also got our flash manufacturing PMI, which is important to look at, but our most important data point on these PMI numbers, the Purchasing Managers Index, is from the ISM, which is the Institute for Supply Management. But we'll still take a look at it anyway, coming in at 52.5, in line with expectations there, in the services coming in at 52.2. National Association of Home Builders coming in at 76, higher than the expected 70. So pretty decent economic data, I would have to say, here in the United States at least. Across the pond, we got a bit of a mixed bag and more of the same on some fronts as well. All right, let's talk about the overall markets. The market is kind of celebrating the data with crude oil moving higher again, back into that 60 handle, which is not really where I'd like to see it, but that doesn't really that sometimes the market can stay irrational a little longer than we can stay solvent. I don't have any positions in this, but we are starting to approach getting a little overextended to the upside. As you can see, that 60 handle is a line in the sand that we look at, more of a psychological level. We should start seeing gas at the pump start to rise as well and go above that $3 a gallon. Not what I want to see heading into the holiday season, because the extra $5 that we save on each tank of gas can be a stocking stuffer here at the Christmas season, and that really creates velocity of money. Right now we're seeing the market push up and above 60. A settlement above 60 would be a big coup for the bulls, especially with Friday's doji was really starting to look a little bit toppy as we tested that 60 handle, started peeling back down and created a nice spinning top doji here. So that was looking like we were going to kind of get a little toppy, maybe get a confirmation today. Not seeing that right now. Market starting to push. A settlement above Friday's high would really wipe all of that out. At this point, if it settled right where it was, it would kind of indicate more of the same to the upside as we are starting to really trend higher here in this market. You can see we are basically in a trend channel moving and aren't able to break out of that for the bears, or at least for my market hopes for crude oil. I'd like to see it much lower, to be quite honest. All right, gold futures are moving a little bit higher as everybody's happy today, other than maybe the people in the bonds. Bonds down almost a full point on the day as people are really diving into the equities, and that's causing the VIX to come off. That's a little bit of an indicator that the equities are moving higher when we see that VIX fall off quite a bit and the VIX back below, or out of the teens, I should say. All-time high here in the Dow Jones Industrial Average, almost 200 points higher. It'd probably be about 40 points higher even yet if Boeing wasn't really being the biggest drag on the market right now, because Boeing is off by about $7 or in and around that somewhat, because they came out and said that we'll talk about Boeing here in a minute. I got a chart ready for that because you guys know I have a position in it. But here we have the Dow Jones up 200 points on the day, NASDAQ up 90 points on the day and on the highs, as you can see here with the 86.11 trading right now. 86.1175 is the high. E-mini S&P's 3,200 being printed right now, and that is also an intraday high. We can see that show up here in the breakdown of the daily chart. Every candle is a 30-minute candle, and the day session came out overnight, got very long. This has to do with China coming to the table. They are almost out of pork. They are on their reserves of frozen pork, so they are desperate to buy some fresh pork, and that's going to come from the United States. Over there, they have a lot of issues going on with the Asian flu and that impacting their pork, and all they really have is their reserves, which is frozen. They are looking to buy massive amounts of pork here from the United States. So talk to your wives, talk to whoever's buying the groceries and say you need to get long bacon right now. All right, so with the Dow Jones, the NASDAQ, and the E-mini S&Ps up on the day. Some of the draggers right now are Boeing, and as you can see here, Boeing is off $8 now at this point. They were down almost $17, came down looking to test that 325 area, which is where we have our Fibonacci. I talked about this. Market wants to probably come down there. We have several times where we have printed down at around these 320 areas. I actually expect this Boeing market to start trailing off a little bit. As you can see here, at the beginning of the year, we were trading just below 300 in Boeing. We got a big rally happening, and then the news came out about these 737 Maxes. Now they're talking about halting production on that. They're still building these planes. People are pulling orders, meaning canceling those orders, and they're building inventories. I don't know what the inventory cost is of storing a 737 Max, but it's got to be pretty high. So they are talking about either pulling back on production or halting it altogether, as everybody is starting to cancel these orders. They're not seeing any new orders coming in for this product, and that should hurt them. So I actually expect the market, with them talking this way, to really come back down and at least test the yearly low, which happened, as you can see back there, at the beginning of January, where we got those lows And there's been a lot of bad news out there, and if this happens, that really could hurt them. It actually could impact GDP here in the United States in general, because it is a U.S. product. It is being built here in the United States, and the suppliers that go in to supplying products for the 737 MAX are going to be impacted as well. So that could really draw down the overall GDP, because it is such a big behemoth company. And that is with this down 8 points on the day, or $8.50, that is impacting the Dow Jones by about 40 points at least on that side. So we could see the Dow Jones up like 250 points on the day if they were unchanged on the day as well. And as a matter of fact, even McDonald's is not faring too well today as well. It's off by a little bit. Also, I have a position in McDonald's where I'm long McDonald's and short Boeing. So added short deltas. You know, there's always a bear market, I say, and there's always an opportunity to take advantage of something on the downside. But you can see here with the McDonald's being down 34 cents on the day, that's not going to impact the markets or the indexes as much as Boeing being down as much as it is. But we are still seeing some weakness here as well. So McDonald's, I thought, would start cruising back towards that $200 a barrel today. We're starting to see a little bit of weakness, but Boeing really helping out to the downside, down over 8 points to the portfolio. So, all right, that's all I got for you guys, other than hope you guys had a great weekend. Check out this week. It is an action-packed week for my webinars. I'm going to be doing 2 of them. One with Steve Bigelow, where he comes up with a trade recommendation for different stocks and things based on candles. And then I'm going to be talking about how to implement option strategies in around those predictions. All right, so check that one out. And then we also have our course that we are doing every Thursday on trading options, and how to build those out. So check both of those out. Go to protraderstrategies.com. All right, and if you can't take that, take it easy.